let me into my zone. Please don't let me into my zone. 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 Please don't let me.
Well, welcome back to Krown's Kiddo Cave on this lovely little snowy Saturday morning over here from Helsinki, Finland. A very cold and 0 degrees Helsinki, Finland. As always, I am very, very frustrated this morning dealing with all sorts of technical difficulties with regards to my computer, with regards to streaming software. So if you are an OBS aficionado, if you know what the fuck's going on over there, I would love to talk with you because I think and Elsa can probably attest to this, I'm probably going to lose a fucking gasket in my brain if this goes on again. For whatever reason, my camera doesn't want to work. For whatever reason, my Windows software doesn't want to work. So there must be something that I'm doing wrong. Otherwise, time for a new computer. Anyways, I do want to talk about. I want to stop talking about all my negative shit. I want to talk about some more important things to be a little bit more in tune with maybe what you're interested in. For all the people in the Jewel program, I want to remind you that we have opened up a new special channel for people in the Jewel to talk about the Jewel, as that's been asked for quite a bit. So just message me on Discord. Please direct message me. Do not tag me in a post because it's just it gets lost too easily and it's very difficult to track. And realistically, my phone just blows up with a lot of those. So it's just not the best way. I'd greatly appreciate it if you just did it via DM and then I can add your access right there. Also, with regards to and I should say, please do give me a little bit of time for that as well because I do actually have to go in and add your access individually, which I'm happy to do. Just understand that sometimes I might be sleeping or going somewhere out of the apartment, so sometimes it can take a few hours or maybe even longer than that because I do try to sleep about 8 hours a night. Also, for the people who are interested in testing out the Krown trading application, we are opening up some more spots. We ask a few things of you though to be aware of before taking on this endeavor. First and foremost, the biggest kind of roadblock here, or not roadblock, but the biggest what's it called? Prerequisite? How the fuck do you say that? Prerequisite that we're looking for is we want to see is essentially what we want to know that you have the technical analysis program because you're going to actually get access directly into that program. Just by having access into the app as it is right now. So we want you to kind of test that out, go through the videos, and give some feedback on, any sort of errors or things that you like, things that you don't like, because we are, again, we want to make this as good as possible, and making it as good as possible means that we quite literally want to go the extra mile with making sure that everything's done right. A few other points of reference for that, and I know that this is going to sound a little bit crazy, but it's just the way that the application is kind of set up right now. Again, I'm not a programmer myself, but I understand that this is kind of necessary for where we're at within the current development of this, and we want to make sure that you're running Windows 10 operating system with 8 gigs of RAM or more, about 500 megabytes of free space, and a DX11 capable video card with 2 gigs of video RAM minimum. So I know that might be a little bit, unreasonable. So fair enough. I do apologize for the inconvenience. Of course, this is going to be all, figured out by the time that the app actually comes out. But for right now, that's kind of where we're at. So if you meet those requirements, then I'd be happy to add your access into there, and that would be pretty damn cool. So again, and if that is you, please reach out to me via direct message. It's just going to be a lot easier. So with all of that said, I want to follow up from my video yesterday, but let's actually get into it right now. So I would like to wish you the best. Also, as always, the happiest of the happiest. Myself, not so happy this morning dealing with all this nonsense. It just feels like a waste of time, to be quite honest with you. And I'm talking about my computer difficulty issues right now. So let's get into live stream right now. I'll press that button and I'll look at a good old Bitcoin on the daily. There she is. And Bitcoin, as you can see, coming down to our first kind of targeted area, right around the daily 200 exponential moving average right here, which was kind of in the 8650-ish region, which I do believe we hit on stamp. So I was saying that first targeted region was between about 85 to 8600. I do consider this, the target being met on that first sort of a leg. And again, this is, these things aren't going to be exact. And when I say that sort of a thing, understand that it's when we're talking about trading, we're talking about, just getting things good enough, not necessarily perfect. And also it's not necessarily, supposed to be like a signal service. So I've just been getting a lot of messages from people who I totally understand, you want the answers, and you think, and you think that that's there's some sort of an interplay with that. I want to be very open and transparent with this. Remember, I was treating this as bullish up until about, right here is where it really started to lose its luster. But this is the whole thing with this channel. We're focused on we're focused on traders and trading, and that's less of like a crystal ball type thing than it is of just straight up, changing your opinion when the time is right. So yes, I did take a short based off this. I entered in right a little bit above 9,000, like 90.30ish. I believe I showed that entry yesterday on my live trade thingy, but I don't want to bring up my FTX account right now because it's going to expose my username at top, and because I don't have everything all set up in the way that I want to have it set up, then it's just going to be unnecessary risk. Although it is just a streamer account anyway, so there's not really too much in there. So if you do want to come and hack it, well, fair enough, but I'd also like to keep that trade running for now. So I do still have that trade open. I did take like a third of the profit right around the area that the area that we looked at last night, 87.69. So pulled in a decent amount, and now just kind of letting gravity do its work. And of course, just as with any trade, well, it can always go against you. And in this case, I'll be managing risk right around probably 9,000, and I really don't see any reason to not let this trade play out, as long as we're especially below the 21 exponential moving average. But even the 55 right here, the more and more divergence that these two moving averages get away from each other, is the more and more convicted that I will have for another leg down to the 82 to 8,000ish region down here. Maybe another test of the 377 at about 7,900. Anywhere within that region would be about right, but still going to take a few days for that to, for that sort of a signature to follow through, I'd imagine. Looking at momentum oscillators, we do see that the good old daily Stokes are coming down, actually rejecting the bullish control zone. Now there is a nice supporting trend line coming in right around here. Let me actually redraw this for this time frame, as I believe I drew that for perhaps a 12-hour, which we'll look at in just a second. Looking at this right here, I would be expecting to bounce somewhere down around here, a decent bounce. Which, where does price action end up around that region? Well, like I said, a few more targets to the downside. If this area does break, I'd be looking for another perhaps small bounce right around about 84.50, and then likely down to the 8,000, $8,000 region. And at that point, I'd imagine that wrong window. Back on over here, that we'd probably be seeing Stokes coming down around here, and we'd be preparing for like a decent, decently tradable bounce. Not that this one that we're currently experiencing right now isn't tradable. I mean, we've already ticked up about $200 from the low. We got down to 86.50 yesterday, and we're at 88.50 right now. $200 is certainly tradable. I mean, especially when we're dealing with an $8,000 number in general. And let me just make sure that my microphone's working. Okay, great, and I'm also recording. Okay, got all that. So Jesus Christ. It's like, what can go wrong on a Saturday morning? Pretty much everything, actually, pretty much everything. But at least I've gotten that right, at least I think. Perhaps there might be some Aquaman voices as well here. You never know. You never know what you'll get on Krown's Crypto Cave. It's like the least professional broadcast of all time. But I'm just doing my best over here, man. And I'll hopefully figure this out by the end of the weekend. So yeah, of course, our next sort of ledge of support is right around this 200 exponential moving average right here, which is currently coming in right around 8,700, a few ticks below. So if we do break that, that would also be the next actionable thing for me to look for a move down here. As for lower time frames, kind of governing something like that, because realistically, a daily is probably going to get most of the move to begin with. Let's see if we can find anything on a 4-hour that would kind of make sense. And perhaps if we do close a 4-hour doodle below the 200 simple, which is 8,600, then yeah, I would be looking for that move down into like the 8,200 and lower region, most likely. I do kind of like this one. The 4-hour 200 simple, this white moving average right here, has been, a pretty damn good just general guide of overall trend and like major inflection points. It does still have a positive slope, to be fair, but that also does mean that if we do break it, well, that could certainly change around. So I'm certain that, or I'm not certain, but I would imagine that most people right now are asking, are we going to get continuation to the downside, or is this going to end up being a little bit of a bear trap where we pop back up? I mean, looking at volume signature right here, it's not anything super conclusive. It's not anything super impressive. So I would say that is certainly a possibility, just granted upon that. And the way that I kind of be managing this, once again, we already spoke about the daily and how to manage it right there, which again, is maybe not the right way to be doing it for you. It could be the right way to do it for myself, but it doesn't mean that's going to be the right way for everyone to do it. Of course, I'm just sharing, what I'm doing and what I'm thinking here. And if that, if you find any value in that, that's great. If not, then leave a mean comment because it's always good. But looking at this right here, I would say that the blue 3.7 exponential moving average right around, a few hairs below, or actually no, it's a few hairs above 9,000 at about 90.16. As long as we're operating below there, I don't really see any reason to look at this as sort of, as like a bear trap. But if we did get back above there, I would look at this as just a quick, liquidity grab to the downside and then getting ready to move back up into like the 93, 9400 range right here. But for right now, we're well and far away from that area. And I would say that I think that is less likely to happen for the reasons that I'll show a little bit later in this video. Anyways, looking at lower time frame oscillators, we do see 4-hour stocks want to cross the upside. And, could that give us the power to get back above that critical level? Perhaps, yeah. I mean, usually coming from this region, that's, $150 from where we are right now, certainly possible. Looking at 3-hour, they're already crossing the upside. Looking at 2-hour, they're coming from the same area, and looking at the hourly, still up as well. So, usually when I see all those guys align with each other, we typically do see a decent move within that direction, and that does certainly offer up the potential that we actually do pop back up above this region. Could also use the hourly 377 expansion moving average right here. You basically see all time frames, major moving averages coming in around 9,000, give or take about $30, we'll call it. So I'd be happy to get out of my short trade and take the rest of the profit on that if we do travel our way back up here. But until that happens, I'm happy with letting the letting Bitcoin just kind of play itself out. As it typically does. So going back on over to the 12-hour now, I do want to take a look on this. Yes, we are kind of resting on the 377. So if you did want to manage that same trade or the next breakdown, I suppose I would be looking for a 12-hour close below the 377, which is 87.50. Yeah, 87.50. So we're only about $100 up above it right now. If we did close below there, I would be looking for another move again down to into this pocket right here, low 8,000s essentially, like 82 to 8,200 down. Really towards like 7,900. This is going to be a whole area. I mean, this is a whole order block within this territory, to be fair. And if you are in the technical analysis program, you do know the implications of that. So something like this, I don't have it charted out here, obviously, but you can see, or I guess it would be a little bit collapsed on that. In fact, I'll do a little bit more like this. This would be the next area that I'd be looking for a major, a tradable bounce, and then potentially even a reversal. Right now we're kind of holding off of this blue box right here, not an order block. This one's more of a liquid zone, but same, kind of same idea anyways. And this trend line right here, I don't think it's like that. I don't think I don't think that we're gonna have anything more than like a short-term bounce off this if we do reach it. I don't think that you're gonna reverse from here. It's the reversal either comes from this area that we're at right now, or we come down in this pocket down here and potentially try a reversal right there. Could also be that we just shoot all the way through and we create some lower lows, which we'll be talking about in just a second right now, because why not? But first, let's talk about 12-hour momentum oscillators. We do see 12-hour Stochs still coming down. More importantly, remember this trend line that we were looking at yesterday? Or sorry, the last few days. This one's been absolutely shadowed here, and not only is it being shadowed, but it's being shadowed at the edge of the bearish control zone. So putting those two together, we're losing the trend, plus initiating, plus getting comfortable in the bearish control zone, which does tell me that downside can certainly sustain within this region. We have plenty of room here, just like the daily as well. Although less aggressive, but is a rejection of the bullish control zone. So I would say that there is legitimate concern for Bitcoin right now, in my opinion. And again, this is coming from someone who generally believes in Bitcoin, who generally likes Bitcoin. And I'd much rather have Bitcoin just go up than down, because it makes my life easy. I mean, as a trader, there's a great saying: don't confuse brains with the bull market. Well, there's a reason for that. But looking at daily right here, we did lose the exponential, and while we do probably maybe try a little bit of a push through the neutral zone, maybe to test it once again. That looks like a clear rejection to myself. Historical volatility percentile is still expanding. We're still maintaining above the moving average, which is actually quite aggressively sloped to the upside here. So while we do see price action move down and volume isn't that impressive, we do see volatility expanding, which tells us that the move likely does sustain. Again, this can get up way, way higher. This is nothing right here. I mean, it's not nothing, but it's certainly no outlier. It's still within the realm of reason, and expansion for extremes. Put in perspective, like that's what we were doing at $14,000 high right here, and that beautiful push right here that we saw towards that first 9,000 tick. Both of those redlining, and if you were around during that time, which likely you were, because it wasn't too long ago, these were some pretty hefty moves. I mean, multi-$1,000 moves were precipitated from these reads. So again, that's to kind of put in perspective. Also, what I think is a little bit damning to myself is looking at the weekly right here. While I would still wait for a closure on this, and I'll kind of make this like a two-pronged thing, but assuming that we close the weekly below the 21, which is currently at right around that $9,000 region. Again, everything that I think matters for kind of dictating this this next segment comes around that $9,000 region. I believe that as long as we're below it, I would be biased to the downside. However, the weekly close is going to take the most precedence here. As it is, though, the big deal with what we did yesterday, and one of the reasons why I looked at the actionable trade below 89.50, just taking out last week's lows, because this has now been confirmed as a local high. And if this is a local high, then this is a lower high. Not only is it a lower high, but we're still just getting rejected from the same trend line that we've been going back. Sorry, let me go to a time frame that makes a little bit more sense. We're still getting rejected from this trend line right here. That last wick that we had on that $3,000 rally, that was rejected by the same trend line, perfectly testing it and then down. So to me, that still says that is still taking precedence and something worthwhile to watch. So putting all these things together, it does start to paint a little bit more of a bearish picture longer term, as a lower high here being confirmed, which technically you could already say that it is confirmed, although I would say that more conservative traders, and I think that it would be appropriate to put myself in that in that basket right now. That's I'm typically in that basket anyways, not politically, but just as a trader. I'm not really anything politically, to be fair, but if we do close below the 21 on the weekly, I would be looking for this to come back down. Very, very likely into the lower 8,000s, maybe even like upper 7,000, somewhere down around the 55. And then we have a downtrend confirmed. We quite literally have a downtrend confirmed. And like I said, you could kind of say that it's confirmed as of yesterday anyways, although waiting for this next closure would certainly put more nails in the more nails in the bag, or what does it say? I don't know. Anyways, we'd have lower highs and lower lows for the first time on a weekly time frame since really 2018. I mean, on a weekly time frame, I should say. Of course, other time frames have been floating around here and there, millions of different ways all the way through. But here's your first lower high. Here's your here's your low. Here's your lower low. And what happens for the next 1.5 years? Downside emerges. So that is what I would be defensive against here. I also see that a lot of people on crypto Twitter and even in our own community are like proudly posting about how they're buying. Once again, Parabolic Trav came out with a tweet, which I actually follow him and I have him on notification just to just to know these things. And it's no disrespect towards him. He's probably just a nice guy and trying to do what he believes in. But I'm not necessarily certain that I would say that that this is like the best technical range to be buying in, only if we close back above the 21 on the weekly. And if we close back above the 10 simple, above about 9,100 to close out the week, which comes tomorrow at 7 p.m. Eastern time, then yeah, I'd actually be on the same side as them. But as it is right now, I think that is, we're quite literally about $200-$300 below that, those price points, which makes me err on the side of caution as a trader. Again, this is about trading, not crystal balling. And I even I swear to God, I hope that I was so fucking clear with this area right here. Yes, I was bullishly biased in this region right here, and I stand by that. That's the right thing to do as a trader coming into a region like this, or at least in the way that I trade. Of course, there's multiple ways of trading, but it wasn't until we actually broke this right here, especially on the 12-hour, is where I started to enter position. And I still get comments which are like, Krown, you were wrong, and you're an idiot, and you're terrible. And it's like, it's the exact same thing right here that we dealt with right here. The second that those areas get taken out, those are pivot points on the market, in my opinion, and that changes my bias immediately. So, if you are going to be a trend trader, then that's kind of par for the course. It happens, and that's what being a trader is being able to trade. And I hope that I was so, and what I really wanted to show yesterday when I was on live stream is I took the long position right around like, I don't know, like 90.50 or 90.100, whatever it was, small position. But I tried it out nonetheless because we were coming down to this support area right here, and that's just kind of what my edge dictates is I'll take those trades because I know that more often than not, or at least over time, over multiple iterations, that it'll come out on top. Well, that one ended up going against me. I think I took like $50 in price action loss, and then what I did is I took the short after that. After we confirmed below the same area that I hope I've been really vocal about, and then then it's like $300-$400 in my favor. So that's what I mean by trading. I'm happy to take a $50 loss in price action if there's going to be a $300 to $400 gain on the other side, and perhaps even more than that, as I still do have the trade running. So that's that's what it's all about in my opinion, and that's why I'm not afraid to be wrong. That's why as a trader, it's not even really like a big deal in my opinion, because it gives me another opportunity on the other side, and that's why I like to set up these things in this way. And that usually you're going to get another winning trade on the other side, even if you take a lossy initial one, or your initial one ends up being the right position to begin with. At which point you get a little more P&L to be fair, but that it's not about being perfect. At least I'm not concerned with being perfect on this. I'm concerned with making money over a long period of time. I'll let the other crypto people kind of make their make the calls and whatnot, but remember, unless the people are showing their trades, it's just I mean, in my opinion, it's just talk. It's just talking. No disrespect to anyone, but I just don't see any reason why, if you're going to talk so much about trading, why not even just start like a streamer account like I have? You don't even need to put too much in it. I just have a very, very low amount of Bitcoin in that streamer account that I've been showing, and it's just really for demonstration purposes. But if I think it's important to verify myself, so that's why I do it. Anyways, okay, I've just spoken a lot of shit already. What else do we want to talk about? Let's go over to 2 days. 2-day Stokes having a fresh cross down, rejecting the bullish control zone as well. We spoke about this yesterday, but still kind of taking over. Does help setting the bias. I would say that from a 2-day perspective, again, what do we see? What do we see the 10 simple and the yellow 21 coming in around? About around that $9,000 region. So as long as we're living below there on a 2-day closing spree, I would still be biased to the downside. Again, remember, I will change around my bias. I will close out my trade if we do close above those critical levels that we spoke about on the 4-hour and the 12-hour and even on the hourly, all coming in around like a little bit around 9,000, give or take a few bucks. And I'd be happy to do that. I'd much rather Bitcoin be bullish, but this is shaping up to be more and more nasty as we kind of go along. The 3-day, what do we have on the 3-day? Did take out the 21 and the 55. We are seeing convergence on these major movement averages. 10 simple is supporting. It's not really giving me any sort of like an obvious read. In fact, I would say that 3-day RSI is more positive than bearish here. Bouncing off the exponential, I do like. In fact, you could just look at this as a retest of the exponential after the breakout out of the falling pizza right here. And that actually typically is, it's a bullish signal. So, it's not all said and done. I would certainly say that, there are a lot of people who are getting like massively bearish after a move like this as well. I don't know if that's really appropriate just yet either. If we close the weekly below those pivots, then yeah, I would probably be on the same page. But for now, I'm not necessarily certain. I'd be convicted of either one side. That's why I'm very quick to take profits or trade on any sort of a relevant level, even on the lower time frames, like a 4-hour. I think that's appropriate right here, just to be protective of your gains. You don't want to give those back, right? So yeah, what do we have on momentum? What do we see on 3-day Stokes? I'm going to be reaching for the bullish control zone on the next tick, which I think we just got one. Yeah, we did just get one yesterday at 7 p.m. Eastern time. So we'll have to wait another 3 days, which is just, man, that's too fucking long. That's too fucking long. But I do think it goes without saying that volume on this move to the downside is not too. It's not impressive to me. Which is interesting. It's very interesting. You expect to see an explosion if we're really going to take some people out. I'm not so convinced of that either. So both sides, even though I am short right now, I don't really have too much love for. I mean, even on the 4-hour, you could be using the 200 exponential moving average right here at about 8,900 and kind of manage off that. In fact, I will de-risk if we do close 4-hour dildos above this region right here. So fair enough. But it's creating a tight range between the 200 exponential moving average and the 200 simple. So I do think that the 4-hour is probably appropriate to really get things right in this region. Although, as always, 12-hour daily are going to usually be the standard for having more conviction on a move. But a 4-hour close above the 200 exponential moving average, I'd be looking for at the very least to move back up here towards 9,000. And realistically, I think that we'd probably pop back up here, and this would end up being a trap, quick little liquidity grab, and then upwards and onwards. By the same token, anywhere below the 200 simple at 8,600, and I do think we'd initiate that target down to this pocketed region here, anywhere between like 82 to 8,000ish region, maybe even 83. I do see a little bit of activity there. But it's all more or less the same, and you never really know where those stray wicks get. These marks are 100x leverage, which means that people getting liquidated are just going to force these wicks in all sorts of crazy directions. You just never know where the BitMEX liquidation engine is going to take you, right? Let's go see how CMEs close out the week. CMEs, remember, did close the weekly yesterday night at 5 p.m. Eastern time, or maybe it's 4 p.m. Eastern time now, closing both below the yellow 21 and the red 10 symbol. I'd have to say that is very, very bad for Bitcoin in general. Typically, we do follow a CME price action. If I put on my drawing tools, could you make the argument that this is some sort of some sort of a formation? Again, I'm not like a huge pattern trader, but you could say that we're doing something like this. You certainly could say that we're doing. I mean, there is an argument to be made that we're doing something like this, some sort of like a massive flag formation, and maybe we pop back down here and then quickly reverse from there. Yeah, certainly possible. But I'm not, I really don't like it when the weekly closes below the 21. I mean, what I want to show here is that in a bull market for Bitcoin, we actually, in past prior bull markets for Bitcoin, we've actually never closed below the 21 on the weekly. In fact, going all the way back to the Genesis, during all these upwards markets, we actually really like to play off the 21 on these, on these bull rallies. So you see the 21 creating lean price action all throughout the last major run from 2016 to 2018. You see it right here during 2013 to 2014. You see it right here from 2012 to 2013. These seem to be respected pretty damn well historically speaking. So CME is already closing below the 21 and confirming below there, and spot's gonna have a chance to do that by end of weekend, again 7 p.m. Eastern time on Sunday tomorrow. So if that does happen, it makes it difficult for me to be immediately bullish for sure. I mean, of course, I'm not really immediately bullish right here either, unless we take out those levels. That's really the only way that I switch around. Could it be that we're maybe doing something like this, some sort of like a massive triangle formation? Maybe. Not really. I'm just drawing lines at that point, and I really dislike diagonal trend lines to begin with. But overall, that's what I'd be looking at. There certainly are some competing narratives for some more, to try some more upside after this. But this is my main look right now. As long as we're below that $9,000 pivot, let's look at the Bitcoin VWAP ratio as well. I've been following this quite a bit, and this is again the most damning thing to me. As I'll explain, I won't go into super detail here because I typically go into super detail on the Sunday video, which I will be uploading tomorrow, of course, on Sunday. But I did upload one last Sunday and the Sunday before that and the Sunday before that, and I did go into detail. So if you do want the more in-depth explanation, just go back to those videos. They're in a playlist titled Long-Term Analysis, which I do every Sunday. And this guy right here, we still see the purple living below the regression line. And more importantly than that, if we can zoom in, sorry, let me pan it first and then zoom in. There we go. We do see that the pink has come back down to that regression. So just a few days ago, it was more on the positive side. Now we are coming back down to it, basing on it. If it does dip below, well, all the other times that we've seen this same signature, going back on over here, this was beginning of 2018, right? That did line up with this price action right here. And then of course the blue getting below as well, just put that into, just added more weight onto it. So there's three things that I'd be looking at. Is first and foremost, the relationship between that kind of like signal area or what I've been referring to like as a regression line, same thing essentially. Then their posturing around that, and then their relationship to each other, and then their divergences between each other on that relationship. That kind of dictates the strength of it. So if the blue does get below this area and then trends below the purple and the pink, that's when we get this, right? That's when we get this action right here. And this was a 75% pullback. 75% crash is maybe the right term. The time before that we had a similar signature was right on over here. In fact, a very similar signature right here, where both the blue and the pink were kind of maintaining above during this kind of bull trap right here. And then the blue finally came back down, and we played out about a 75% drop down from this area to this area. And before that was just a few months before right here, just getting the purple below the pink. Very similar to what we have right on over here, precipitating about a 70% pullback right there. Same thing right here. We never even really see the blue get that aggressive down, but this was a 70 to 75% pullback nonetheless. And the time before that was going all the way back on over here. During this one, which I think was like a 90% pullback. So that one's a little bit more of an outlier. I'm not saying that we're gonna have like a 90% pullback, but I do think that if we, if we do, if we do see that same signature and all the past prior times that we've seen that signature, we get, I mean, we can just measure them out right now. We had one right here, of course. It's a 71%. Let me just line it up. Yeah, that was this one. Whoops, that was this one. Then we had this guy right here. So that was middle of 2014. So going back to this one, that was this high. And we had about 75% pullback. Then going to this one, that was the one prior, just a few months before. And we had a 73.25% pullback. We had this guy right here, which doesn't look that bad on this chart, but well, another 75% fucking pullback, right? And then we got this guy right here, which again, this one's kind of the outlier. 93.5%. I think that would be like pretty, that's a little bit too brutal. Just out of curiosity, if we were to shave 75% or 70% off this price action, where would that put us at? That put us at around our prior lows, essentially back in like the $3,000 to $4,000 region. So could it be that Bitcoin is, and again, this is way far in advance. I'm not saying that this is going to happen right now, but I am saying that this is something to consider. Especially for the people who are, for the people who are like buying religiously right now. Again, this is not financial advice, and I'm not a financial advisor, just kind of sharing what I'm looking at. Could it be that we come down here and double bottom? Well, that sounds very similar to what you perhaps seen in an asset that's usually kind of touted as a similar asset to Bitcoin. Gold. It has this rally right here, comes back down, kind of, I wouldn't say that it's double bottom, but we do have a higher low, of course. We come back down around the bottom, and very, very similar. You see you see your parabolic move up all the way to the upside right here. It's kind of like akin to, let me see if I can, I'm going to do this on this chart right here. And let me just get this off for a second so we can look at it naked. That's kind of akin to this rally right on over here. You consolidate for a while, or sorry, on Bitcoin terms, consolidates for very little time. But gold takes its time. There's more players in the market, so naturally it's going to take its more time. Gets that first major markdown, and we go into this phase right here. Then consolidate in like a descending triangle. It's kind of what you get in this area right here. Move down again for your last little washout. You get your last little washout right here, and then you get your markup for another impressive rally. Comes back up to that same major rejection area, which would be motherfucker. Do I want to delete all these drawings? Well, you see, I don't want to delete these ones, but you do see kind of where I'm talking about. This like range high in this region. That's kind of what Bitcoin did right on over here, right? We come back up to the range high, and then get rejected there. Similar to what we see right here, gets rejected right there, comes back down, and then consolidates its way. And this is actually healthy over a long period of time. But I just want to show that these things can take a long time. People want to be like super bullish or super bearish, and there's no in between. And realistically, as a trader, you have to realize, or at least what I've found to be true as a trader, is that a lot of the time there's a lot of ambiguity, and most often than not, things just quite literally take time. So being super bullish or super bearish is just not really warranted, or it's not really helpful as a trader, because it's like, well, you have to trade in the present moment. You can't trade in the future. You have to trade what's in front of you, of course. The liquidation engine doesn't say, yeah, we know this thing probably goes to that price action, but well, if we have a little bit of if we have some drama in between there, you might get you might get taken out, right? So that's the whole thing. There's another great saying, like, even if you're early, you're wrong, and I totally agree with that. It's like, even if you're early, you're wrong. What does that mean? It means you can have the right idea for a trade. You can have the perfect fucking idea for a trade. And in fact, you probably experienced this before. I certainly have myself, but you enter in a little bit too early because you think, well, it's definitely going here. There's so many things on that, on that level. And what happens, you get that last little push, and then you get even more convicted in your, in your stance. And then, you add more, and it just gets worse and worse. And by the time the move actually happens, either your stop loss has been hit, you've managed, you've taken yourself out of the position, or the market's taken you out of the position. Fair enough. And that's actually how I blew up my account. when I was first starting out, like that was the worst experience ever, but also a very humbling experience and a very valuable experience as I learned, as I learned that lesson. Which, listen, you don't have to learn that lesson yourself. There's another great saying. I'm just fucking quoting all over the place today. A smart person learns from their own mistakes. A wise person learns from the mistakes of others. You don't have to make that same mistake, but I also understand that most people will have to make that mistake before they get the emotional conditioning to have that set in, which is just a testament to our human, psychological conditioning. But hey, you don't have to make that mistake. In fact, for the brilliant people out there, which we have a shit ton of people in this community, you quite literally don't have to do that. You quite literally don't have to do that. Okay, I see I've been recording for 35 minutes already. How the fuck is that even possible? Okay, cool. While we're here, let's actually go look at expected moves for a second. Where is it? There we go. Expected moves, actually getting the downside support let's go to a daily. Getting the downside support pretty well yesterday, but we are kind of hovering within the middle of this region, and volatility, still expand within this region does suggest that this range does get bigger and bigger, meaning we come back down to about 8,400, not really destroy anything and still bounce off there. So it actually would agree, I did discount that 8,400 region as potential support level by just looking at spot. I think I'm going to be wrong on that. I would trust volatility more or volatility metric more than my own opinion on something like that. So yeah, if we do come down to about 8,400, probably do play at a low time frame bounce there, but I don't think it'd be anything more than that. I really do think that if we break that area right around 8,600, especially on like a 4-hour close, 12, and especially a 12-hour close, that'd be beautiful. Well, maybe not beautiful for everyone, but we'd probably have a small bounce here, but ultimately, come down lower to this guy right here. This is the one that I'd really be looking at right around about $8,000. This would be the second standard deviation, so that is quite a low chance of happening. Because it is only on one side, it'd be 2.5% or less than 2.5% chance of happening. Over here would be within about 34% chance of happening. Of course, if we're just incorporating this whole range, it'd be 68% chance. But I think that the downside being a little more likely does say that this this level right here is a little bit more likely. Keep in mind that the first standard deviation for the upside is coming in right around about 9,200. So that means that that's actually 34% likely that we actually do that's actually possible, and that would obviously put us above that critical $9,000 region, $200 above that region. So that's even more. So it's actually even more probability to get into that region because it's within the range to begin with. So it is, it is still likely that we actually do have that we do have a trap, and we do have a little bit of a bear hunt here. So fair enough. It's within the realm of possibilities. Is what I want to show. From a mathematical perspective. Anyways, I think I've kind of beat everything to death. Let's go check out GBDC, and we'll look at some highly sophisticated altcoins. GBDC having a beautiful bounce here, actually. So is GBDC going to be the harbinger of peace and prosperity that we actually do, that we actually initiate that and we pop back up into this region here? Perhaps yes. This is a very good response on the 21. Very good response. Now I will say that momentum oscillators are not looking good. We do see daily RSI coming down. Daily Stokes have a fresh cross down as well. I'm not the biggest fan of those reads. Again, as volatility expands, so it does look kind of nasty. But I'm curious how the weekly closed. Did the weekly close below the 21 and the 10 simple? No, we closed below the 21, but not the 10 simple. I'm curious how this one's done in the past. More or less good. The 21 is more or less tested long term. I would have really liked to have seen it close below the 10 simple if I could get like easily bearish. Technically we do have a bearish engulfing dildo right here. But man, these low volume dumps do make me apprehensive for further follow through. Could this just be a bearish retest of the gap? Yeah, perhaps. Definitely possible, but I really think that waiting around for tomorrow's weekly close is probably going to be the key to this one, to avoid any sort of a trappy behavior. Okay, cool. Let's go check out Bitcoin dominance. I hear a lot of people on crypto Twitter talking about how altcoins are going to the moon right now. I'm curious if this is represented in chart format. And looking like we're coming down now, we're probably coming down to that 68% region. In fact, Oh, nice. We're 68 and 3/4 right now, and it is breaking down here. And I do think that we come down to that target of the 21 on the weekly, which is going to be a little bit below the 68% region. So altcoins, yeah, I would have to say that are mostly going to be rallying versus Satoshis, which also does make me kind of put in perspective that maybe we are having a trap and a hunt here. Because if Bitcoin was really, having some downside pressures and not just ranging, we'd expect that altcoins would be falling apart as well. That's the trend that we've seen in the past. When Bitcoin really dumps hard, altcoins are going to follow. But when Bitcoin is ranging, altcoins will actually typically benefit. So if Bitcoin is ranging here, and this is perhaps near the low of the range, then that's going to be a major consideration for me getting long once again. But yeah, I do think that we have more downside here, so altcoins probably going to benefit more. Let's go see what Cardano is doing right now. Is it benefiting? It's still going mostly sideways. I do think that we are starting to see this one flatten out. I don't necessarily think it's appropriate to be like super bearish on this one just right now for like a trade. Longer term, is this chart good? No, but shorter term, looking at this segment right here, this is starting to flatten out, which does imply that we are seeing accumulation over a decent amount of period of time. I'd like to see this go on for like another few months, and then perhaps, yes, it would be the time to get bullish on altcoin versus Bitcoin. I just want to see one more. Maybe let's check out like a Mr. Buteroll here. Yeah, taken up as well. If we can get Mr. Buteroll back above 22 on a weekly closing basis, that would look pretty damn good for a nice, for a nice rally back up into this region here. 0.293 region. Look pretty good. Again, kind of flattening out here, and you can see that it's we have created a higher low. Not bad. I'd like to see a higher high, but hey, if you can do that by closing above 0.222, look, I mean, it looked good for me for for a move up into this region and probably beyond. So a lot of altcoins actually showing some life here and potentially turning the corner. Let's do one more, Mrs. Litecoin, this beautiful bitch here. Yeah, again, probably gonna have some bullish divergence off the low. Yep, we do have some bullish divergence also crossing the exponential. I would have to say that I'd be bullish on Mrs. Litecoin versus Bitcoin, probably popping back up into this region, somewhere around 0.78 region. Maybe a little bit longer term. So yeah, a lot of altcoins actually, looking okay. What else do we want to look at? Let's look at total market cap. I'm curious how that one's shaping up. Again, a little bit of a non-event there's certainly more important things, of course. Let's put down all major moving averages and see what we can come up with. Not really giving us anything that Bitcoin chart isn't already doing. I'd still look at the same levels essentially. You can see that we are holding up off the 55. Fair enough. Yeah, fair enough. I don't have any like really strong opinion on this. No obvious opinion at least. Let's go look at our other top alts. Let's go look at Mr. Buteroll. Mr. Buteroll kind of looks in trouble here on the US dollar pairing. We're still just making lower highs over a long period of time. If we can close any daily below the 21 or even take out yesterday's wick to the downside at 180.5, I'd be looking for a move all the way down here towards 169.5, 172 to 169 region, somewhere in this pocket here. By the same token, if this thing can trade even just above like 191.5, I'd be bullish on this for at the least giving another test back up towards this region, like $200. And realistically, I don't really see too much of a reason for it to stop there. I think the next major area obviously is going to be this area, the 200 simple at 214. Longer term. But again, are we flattening out here or are we losing momentum? Well, let's look at momentum oscillators. Momentum oscillators turning down. Daily Stokes looks like Bitcoin's yesterday. Daily RSI looks again like Bitcoin's yesterday. In fact, putting in some bearish divergence between this point and this point, although I think you could argue that that's mostly played out. But hey, it is looking a little bit droopy here, I would say. Mrs. Litecoin, what you doing? Same thing, pretty much same thing. I would get bullish for a short-term move back above 64.25 all the way up here, actually. Quite a nice move to about 73, but looking a little bit sloppy here and taking out yesterday's low at 58.83, and I'll be looking for another move back down to the low 50s, like 54 to 53 region down here. Again, long-term downtrend thus far, but I should say the weekly really makes this difficult. I wouldn't want to play Litecoin bearish. I also don't want to play it bullish. It's caught between the worst two places as a trader when they're converging on each other. The 200 exponential moving average right here on a weekly and the 200 simple right here. It's like I don't short into the 200 simple. I also don't buy into the 200 exponential moving average. However, as this drags onwards and forwards, I do think that the odds favor some upside here. Longer term, assuming that we can close this weekly above the 200 simple, especially if we close above the 200 exponential moving average, then yes, I would be looking for a move up here to like $71 and beyond. But for now, still, it's too early to call it. So I just want to show that this market is bifurcated, and if the altcoins are something to go off of, I do think that they look actually better than Bitcoin right now. And Bitcoin not really actually benefiting altcoins versus Satoshis on these dumps is very interesting to me. So I think I'll start to wrap it up right here, or maybe let's go look at Ripple's. Oops, wrong one. 28 cents. Getting rejected by the 21 and the 200 simple once again. What do we see on the daily? Daily kind of looks like a breakdown to me. I think Ripple does have some downside here, down to like 26 cents if I had to guess. Swell event was a sell-off, as usual. It hasn't been as nasty as a sell-off as we typically see, but a little bit of a sell-off. Although the Bitcoin pairing is ticking up, to be fair. Okay, let's go wrap up Mr. Bitcoin. I think on a daily time schedule, it's actually quite simple. No pun intended. Actually, let's do this. Okay. I think these are the ones that matter most on a daily closing schedule. As long as we're closing dailies below these two guys, right around 9,000, I don't really see any reason to look at this as a bear trap. By the same token, while I am, I suppose, biased to the downside and still holding that short, it's going to be hard to target those lower moves until we actually break the 200 exponential moving average on the daily. Of course, we could go down to the 4 hour if I want to be a little more active in managing this position. And I would say that, let's put back on the 200 simple. And I would say that the ways that I'd be doing it here is 4 hour 200 exponential moving average to the upside. If we do take that out to the upside, I would be looking for a test towards 9,000. That's going to open up the gates right there. It doesn't get the job done by getting above the 200 exponential moving average, but getting above the 377, this blue guy at about 9,000, closure above there, and I'd be looking for a return back up to like 93, 9,400, and probably beyond. This would be considered a trap, and time for me to get long. I mean, I'd get long back above 9,000 most likely. By the same token, 4 hour deal to close below 200 simple at 8,600. I'd be looking for a move down in this pocket. Low 8,000s, technically 8,400 showing a little bit of support as we saw on volatility. Like I said, I am biased to the downside, but as a trader, I'm happy to switch my position if the charts do say so. And, again, just a reminder that as a trader, you don't need to be right in order to make money. You just need to know how to trade. That's really all it comes down to. So the biggest thing that I see with people is they want to be right more than they want to make money. And the problem with wanting to be right more than wanting to make money is the fact that you're not going to let yourself change your opinion if your initial outlook is wrong, which I'm very happy to do. And you see me do it all the time. People get mad at that, but that shows that they're kind of on the other side. You can't get married to your position. You can't get married to your fucking position over here. Anyways, I hope that this was in some way helpful. I hope maybe even a little bit entertaining perhaps as well with my earlier aggressions. I apologize about that. It's embarrassing to lash out on my own computer, which just can't even talk back. It's like it's mean. But yeah, man, still dealing with some technical difficulties here. Hoping to resolve it by end of weekend. And until then, I'll be hard at work doing all that. So yeah, as always, wish you a nice and healthy start to your Saturday morning over here from a snowy Helsinki, Finland. I'll be back on tomorrow. I might upload a psychology video later today. If there's another trade to be taken later today, I will hopefully upload a video on that. Until then, take care, and until next time.